The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi, folks. Wednesday, the 22nd of November, day before Thanksgiving. I think it's time for a little song. So I've got a song that I wrote back in 2000 or something. I used to be a professional musician, actually, called Buy at the Low and Sell at the High. And this is a really good example. So the market goes up, the market goes down. Supposed to buy at the low and sell at the high. Snap, snap. But you know what we tend to do? We buy at the high and we sell at the low. Chapman wave is what you need. Buy with the Stoke and the old MACD. That's the MACD we talk about. Follow the price and wait for a peak. Higher highs is what we seek. And that means you label each higher high alphabetically A through G. But it's a D objective. That's really what you want to get. The wave goes to A and then to B. Even the anticipated C and D. That's when it flashes a cautionary light. But all you got to do is make your stops real tight. Suddenly it goes to E and F. So it's already gone to D, 5-minute chart. Suddenly it goes to E and F. A bell rings so loud it can make you deaf. But all you got to do is make a soap. So I forgot about that. Suddenly it goes to E and F. A bell rings so loud it can make you deaf. So what you going to do, which way to go? You sell at the high and you buy at the low. So that's my little song. And I gave that into the den just a short while ago as we went to a peak D in the day in the 1-minute chart of the E-mini. 5-minute chart was a little doji peak F, a leg F in this particular instance, and a leg E was in the 10-minute chart. And we plunged from the 45.80 level down to the 45.56s. 45.55 is this 200-period exponential moving average in the weekly chart. Whoops, weekly. The middle chart is the 5-minute chart here. All right, let's get back to the market. Fun's over. Now we get serious. So what we're looking at, crude oil plunged to 73.84. Yes, it didn't take out the low of just 5 days ago, but it is telling us that the weakness in the crude oil is really important because it's allowing certain areas of the economy to benefit, and that would be the jets. That's the U.S. Airline Index, which just went to a leg D, but way off the high. Just the recent high of July, up in the 22s, plunged to the 14s. I would call that a bit of a pullback. And here it is in leg D. I'll type in your D, so you got to be a little cautious here. So that's helping the airline index, but not by much. But what's really important, if you look at the XLE, and questions came in the other day about it, shorting the XL. And I said, I don't think the energy area is really I want to short, especially with the Middle East, the conflagration going on right now, that even though there's a peace, a little bit of a truce going on for the moment, just a brief one, I would be hesitant because oil is still a tool of a manipulation, let's put it that way. All right, so let's just go to the market. We've got the Dow INDU. INDU is 35,168 right now, made a high of 35,269. So for those of this is Technical Friday, so I like to do this on Technical Friday. In the Chapman Wave methodology, what we look for is to try to identify the lowest low bar, count each successively peak, alphabetize A, B, C, D, E, F, G on the way up. D is where other things can happen. There's never an H. It's just a simple tool, A, B, C, D, E, F, G. But at D, other things can happen. So a buy signal gets upgraded to a buy mode. That buy mode says, once I put an up arrow and I say buy mode, it means the implication that at least 4 higher peaks are going to be made. It could recycle and do another 4 peaks, but the objective is to get you through that liftoff to be able to get you to that D. Well, we're at D right now. So objective obtained. Stochastic is at 94%. That's fantastic. On-balance volume, a little bit overbought, so it's kind of ready for a bit of a pullback. MACD is fantastic. 9-period moving average, way over the 14 way over. Nothing here that says to me, other than if you're using Chapman wave technique, D is often where you can get a really decent pullback. We did not pull the trigger there because they're just, one of the reasons why is look, we're looking at the SMHs. The SMH is trading right now. Let me just type that in. SMH is trading. This is a semiconductor. Where the semis go, generally the market is going to go. A semiconductor, monthly chart leg C, weekly chart leg E/A. So now I'm going to be able to put in E, and it doesn't mean say, oh, yeah, it's going up. Oh, well, maybe it's going down. No, it means everything so far is very strong. But because we didn't take out the starting point of the buy signal to buy mode in the weekly chart, this is still, the 9-period is still above the 14. The MACD did cross positive. It did pull back sharply from 161 to 136. But I have to consider that this could be an extension of the previous buy mode, like a coda phase. I'll talk about coda phases in the next few weeks coming up because I think it's really applicable to what we're looking at now based on the auto industry in the 1920s. And here we are with the gas engine, and here we are with the electric motors. The parallels are amazing. Anyway, so this is either a brand new A, because if the MACD turns up stochastics at 76, if it starts to go to 80%, there's a chance it'll go to a B and then a C, even if there are pullbacks without taking out the 136.10 low. So I have an alternate count. And that doesn't make the difference is that the daily chart so far is still in a buy mode. Even this might turn out to be a C1, a C2, technical Friday, so I'll have to explain that. If there is a rally that goes to a peak C, then there's a pullback, then there's a rally that takes the price just within pennies. I like it to be pennies. So in this case, it's more like $1 or $2. So it's 165.44 was the high 3 days ago, and today's high is 164.93. So it's 60 cents or so. There might, if this starts to dip from here, I can call this a peak C1, C2, just to say be ahead of the game. You might be waiting for a D. We might not get it. Prepare yourself and take some profits. Do whatever it is. And not only that, in the cup formation, you need to close at least 2 out of 3 week consecutive bars above the left side high, in this case 161.17, to be considered to be a breakout potential. So that's all I'm saying. That is double topping at this particular point. I've got to be a bit cautious there, but we haven't got the D officially. Now let's go to the S&P. Same thing as the Dow. I got something stuck under that key. That's going to be a problem. I'll try that again. SPX. Oh, I love this keyboard. Don't mess me around. That's it. Leg D at 4568.43, trading at 4549.08 right now, up 10. 9-period way over the 14. Price is way over the 9. The MACD is still very strong. Histogram is pulling back a little bit, but wow, to get that green to go pink underneath that red, you'd have to see the S&P probably at 44.20. And it's at 45.47 right now. So far, that's still very bullish on the daily chart. The stochastics flat at 96, and the on-balance volume's a little bit overbought. That's the hint that says could be a little bit of a pullback here. And the weekly chart is not taking out 46.07. That was the most recent high in July. I'll be back in a moment. Dow's up 93, still holding well. S&P's up 10. Don't think it's all over just yet.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, so the question came in, was this a two-click session? I've been talking about this for about a year now. I've been working on a kind of a methodology that gives you parameters, exact parameters. It's hard to get exact parameters because markets are always different, but I'm getting closer. And the question was this a two-click session? It actually is a two-click session. I did not do it. I wanted to have two different positions on. One would be the potential for a two-click session. What does that mean? Either you try to buy the low in the morning and you want to hold it all the way until either the close or late in the afternoon, and you get out and you have to do nothing other than watch it going to higher highs or higher lows. On the way down, it hasn't been that frequent that you get a two-click session. This was the potential for it. I just didn't have a chance to do it. I managed, I got the one that gave the immediate thrust to the downside. But it would have been, I think this could have been a two-click session. All you would have to do is if you had more than one position, you would then take off and you would keep some core position till the end. And you just lower your stop to where you feel comfortable. From taking out that point, you say, fine, but I would like to see what happens by the end of the day. I see a lot of buying still. I'm not sure, and that's the reason why I said to subscribers, I don't want to, I'm just putting it into the newsletter as one of our positions in terms of giving it a slot, and that would be the short side, but no position yet. And the reason being, I still see strength. For instance, here's a good in the den. Someone's looking at at Boeing as a potential for some kind of a downside reversal, but it's still in leg C. And even today, you have to call it leg C because until it takes out or hits 219.38, actually 219.39, which will extend leg C. This is going to be a leg C, and a peak C becomes a lower low by 1 penny. So the MACD, look, the 9 is over the 14, way over the 14. The price is way over the 9. The MACD is good. The stochastic is flat at 93%. That's what you want to see. Flat over 90% is flat over 95%. It's fantastic. You know that at some point that 93 is going to revert and come back to the 20s or the teens even. But until that happens, you can stay in this position for a long time. That's what you want to see. If you're bullish, you want to see the stochastic flat. Don't read what the books say. The books say over 80% is overbought. Doesn't overbought sound to you like something's wrong, it needs to come back? And doesn't oversold mean, oh, it's ready for a bounce? No, it is perfect. That's what you want to say. If you're bullish, over 90% is exactly what you want. If you're bearish, under 15%, under 10%, exactly what you want. Okay, so with this, I'm looking at this, and the reason why I wanted to bring it out, look, this is only at C. So even if it makes a peak C, you still have to wait for the D. But wait a minute, if you're looking at, say, PAVE, which is the infrastructure area stalling at a peak B, global ex-US infrastructure, almost at all-time highs. 31 with an all-time high 4 months ago at about 30, was that 34.60? I can't remember now. 32.66. This is really quite something, right? And it's still quite strong. The on-balance volume declines sharply, precipitously. But now you've got DEER, and DEER is down 25 points. If you look at the monthly chart, I can get rid of this. I put this in only as an example. I don't need it anymore. So that just says, yes, we're in the kind of oval pattern, but basically you were making higher highs and higher lows. Now you're starting to fail. But DEER is important. That's tractors, farm equipment. If you look at the DBA, which is the DBA Agricultural Fund, we are still long from the 13s. It's at 22. It's holding quite well. This is the agriculture area. What's going on with DEER? But if you look at Caterpillar has had a big move down from the 290s down to the 220s, bounces up to the 250s, and here's the 243, down 6 at 243. This is telling me that this is an extremely mixed market. If you look at the XLF, because of the yields coming down, XLF, there it is. This is a leg C. This is almost looking like Boeing right here. Look, B, slight little pullback, and now it goes to a C. Not very high, but it is a C. And the weekly charts have been in this big rectangle, but this is not bad action at all. It's not great, but it's not bad. I mean, I didn't want to see the financials fail here. I was asked about KRE, and I said, yeah, it could bounce to the high KRE, which is the regional banks. KRE. The regional banks. Oh, and I was asked something. I must get to it right now. Where did I write it? Uh-oh. Oh, no. What was the question? I was going to get to it today. I'll find it. I've got it here somewhere. All right. So if you're looking at the KRE, I said it could move to the upside, but it's really stuck in a rectangle formation. It needs to start breaking down. So this takes me to two things. That the financials are acting okay. Not great, but they have taken off from the bottom. That's really important. And that takes me to gold. So gold says, gold has had a really good move. You would have expected with the, at least the geopolitical situation in the Middle East, that whenever that happens, gold becomes just an icon of fear. And that's where money seems to flow. But even more so when the U.S. financial system is under real pressure, which is not right now. I mean, the chart doesn't say it is. So it means that gold is acting pretty well, not great, but pretty well, but has been steadily rising with silver. Now, if they both start to move, if silver can break this resistance level and start to, it's at 23.67 right now, down 19 cents. If silver on a weekly basis can close above 25.20, kind of get into this range over here on the right, starting to make higher highs and higher lows, that'll be very important. If gold, and it means that finally you've got action in these metals that is almost independent of markets. That's really what my point is. So gold is now down 8. I'm watching gold very closely because it's enticing, but their GDX, the gold miners, I did this whole thing yesterday, finally went to a peak D, but at the same time, it really hasn't expanded to the upside the way you would expect if gold has such a spectacular move from the, what was it, 1800s to the 2000s. I mean, that's pretty darn good. And here is a very quick peak C, peak D, peak, and leg E. It could be a peak E this week. When you see that in the Chapman Wave methodology, says just be careful. You could have a little bit of a pullback very quickly when it's the speed with 1 bar rest between the weekly charts going from a C to a D to an E. Yes, it could become an instant restart. But in the meantime, I'm just saying that it hasn't really proven itself. Oh, GD. I'm looking at GD. General Dynamics. I wondered, why is this chart so different to what I was working on yesterday? There it is, GDX. Ah, that's the one. So GDX, look at this, the weekly chart, something's not right. So individuals, gold stocks and silver stocks, some of them have had fabulous moves, but generally I'm not that impressed. I'm kind of surprised that 200 period moving average is still such an incredible magnet and a resistance area for the GDX. So I'm looking at this. See how I'm trying to put the package together, and I'm saying there is residual strength. We'll look at Microsoft here because that's been the leader. Microsoft made a new all-time high today, and it's just pulling back a little bit from that high. I'll be back in a moment. Dow's up 140.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Guys, I just drew this in Technical Friday, so we just have things live. I like to show you the charts. So this is now a leg B in the 1-minute chart. It's a leg A in the 5. It hit the 200 period moving. Unbelievable. I said 55 is the 200 period moving average, support in the 5-minute chart. And lo and behold, it went right there. Here's your Chapman Wave, left side, right side price time match. It got the, actually, I did this a little quickly. Normally I take the low, if I can, for the trough right there. I should have done this. I did it so quickly, I should have not done that. So that would have been it right there for the first part. Look, that's the plumb line. And that's the plumb line is the number of bars on the left to the number of bars on the right that you're anticipating that it could get back to. And now I go click and you'll see what happens. I go click right there, change it to green, place it exactly. There's no way you can make this up. These are the prices you're looking at right now, other than the choice that I made of the bar, where I chose the bar to hit. So it's one bar late and it took it out. So this is good. This is B. The MACD is good. Stochastics at 90%. On balance volume's a little weak. Relative strength, this little gray line is good. And we've got jump wave inside wedge target resistance line. It broke above it. Now it's going to be support. Can it go much higher? Well, we'll see. But I like the fact that it came back. That's telling me that I was correct in anticipating that there's residual strength still in the market, even though we've got to leg D. Remember, D doesn't mean to say, oh, my God, it got to D. Now you've got to show it says, this is where you do your next analysis. The easy part's done. Now the harder part starts. What happens next? So Dan asked for Microsoft. There's Microsoft. So Microsoft is very interesting because it hit 379.79. It made a peak D yesterday with a lower high from the 370. Was that the 378.67? 378.87 high 3 days ago. And here it is at leg E. And the question should be for those people who are looking to see what happens if it's able to get to the 380s. My thinking here is there's just enough residual strength to at least say, from the evidence that I'm looking at right now, that the low 380s is a possibility over the next, this includes today, from this very moment that we're looking at it with a little doji candle 377.53 into, I would say, early next week. But a lot is going to depend on the analysis, at least for me, the way I look at the markets. We aren't open on Friday, but I'll do my best to get out a newsletter. We've often had positions on these holidays with the day in between. The market doesn't know that it's a day off. Volume might be light, etc. I don't care. Sometimes we've had some of our greatest positions where no one was even looking because it pulled back just enough or went to a certain level. So that's important. So I'll finish with Microsoft in a moment, but I think we've got Garo in Newport Beach. Garo, how are you?
I'm very good, sir. How about you?
I'm very good. You would like to, and happy Thanksgiving. You would like to look at?
SHOT, S-H-O-T. Same with you, sir. Have a nice, happy Thanksgiving, and God bless you and the family. I do thank you, sir. This is the stock I want to talk about, SHOT. If you bring the daily chart, please.
I'm doing that right now. I'm putting in my notation. But Garo, I don't remember you trading stocks in the $4 area. Usually you're up at the $460. Is this Garo calling from Newport Beach? I'm not sure.
Yes, sir. I do once in a while. I'll do that once in a while. Not much, but I'm very cautious about it. This is something that a friend of mine from Seattle, Washington, sent me. I bought it at $1.50 a long time ago. I said 1, 2, 3, 4, 5, 6, 9, 10. About 2 weeks ago, I bought it 5,000 shares at $1.50, and I kept it. Believe it or not, I kept it until $6 yesterday. I got out of it yesterday because when I looked at the last candle from yesterday, you see that it's like a shooting star candle.
Yeah, absolutely.
I got a little bit leery about it, and I said that's going to be a little bit dicey. So the shorts are not available. I tried to short the 5,000 shares. They wanted $80 for that 5,000 shares. So I haven't touched it yet now. Is this It is the way that it went up like a wall. This is come down like a wall, or it's going to come and stop at $4, and then it's going to go up again. Just if you give me an idea, please.
Okay, so Gara, there's a couple of things. First of all, it's safety shot something or other. I don't know what they do. Whatever they do, they shot to the upside. All right. So now what I look at, when I see a stock like this, and if you called me, let's say you called me this morning, it was trading at $5.80, or you called me late yesterday, I would have said to you, Garo, I have a technique. It's called the Chapman Wave Roman candle. This is not a Roman candle, but it has all the characteristics with a very long wick and a body. The body is more than halfway in this case, from the top to the bottom. So I'm going to put it into the same category. And I would have said to you, if this stock trades for over 70 to 80 minutes at any point the very next day above $6.06, then I think it's going to try its best to get close to or even touch yesterday's high. And yesterday's high was $7.50. Instead, what it did is it opened at $5.67. It went to $6.05 for about a split second. It's pulled back, and now it's at $4.25. So this is a stock because it did exactly the opposite of what I was saying yesterday. If you'd called me just before the close, and you would have been watching it closely, but you had to have the patience to hold it. It's a particular technique I've developed over the years, and it seems to work pretty darn well. I would say it works a really good percentage. I'm not going to give a number. I don't do it often enough to actually give you a number, but I know it's a very successful technique. But it would have said to you, wait. Oh, thank goodness I didn't wait, because it hit 605, and now it's going even lower. So everything that happened over the last couple of days was, I don't care what this is, it looks a little bit like a biotech, but it looks to me like it was it was news that filtered out in a position, in an issue that people focus on, and because it kept them making higher highs and higher lows, they said, oh, this is going to go to the moon. And all those people, and I bet it had pretty high volume yesterday. Let's have a look. So today's Friday. So Wednesday, the volume was 21,400,000. Yesterday, it was 3 times that, 77 million. And today already, it's got 26 million. So I would not touch this. You're absolutely correct. So you wouldn't have had, using my technique, you wouldn't have been able to short, because you would have had to wait as it pulled back, say, unless it didn't get to the 606 level, because it went to 605 and said, yep, that's perfect. So I'm just going to say to you, I would not touch this now. The way to look at it is it needs to stabilize. So I wouldn't even look at it until maybe Tuesday or Wednesday of next week, and let's see if it can hold the 365 to 338 level. If it doesn't hold that, I wouldn't touch it again. Hope that helps you.
Thank you, sir. Thank you.
Have a great Thanksgiving. Thank you for calling. Bye-bye.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at tfnn.com.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So I was asked about Microsoft, if I go a little bit more in detail. So here's a 10-minute chart. It had a gap up today. So this is all peak A. See, this is your starting point right here in the Chapman methodology. From the low bar, each peak has to be counted. So this is a peak A, gray A. I haven't changed the color. This is gray A. This is gray B, gray A. Underneath it, gray B, and leg C pulls back. Then under it goes a full A, B, C, D. That's what you want. Pulls back, and it has this gap to an E. Whoa, I have to leave it there just for the moment because I got a call from Brent in Martinez. Brent, how are you?
I'm doing fantastic, Basil. How are you?
I'm well. I haven't seen you in a while. I hope you've been keeping well and the family's good.
Yeah, everything's good. Troy finally proposed to Brooke, so they're getting married next May. That's a little
congratulations.
news there. And, yeah, things are going well. How about with you?
Yeah, very nice. Thank you. And got all the family here tomorrow, and that's great. So you're looking at?
Sibanye-Stillwater, and I just wanted to know if you would consider this to be I think you call it the climax volume low. It hit $4 round number yesterday. I did buy into this, and so I just wanted to have you take a look at it.
So Brent, I can't see it because of the background is so dark on this TradeStation platform. I just can't read it correctly. What is it called?
Sibanye-Stillwater.
So is this in the silver area?
It has a lot of different. It's all in different, gold, silver, nickel,
metals.
Platinum.
Okay.
Yeah.
All right.
Yep.
So
it's South African actually.
Oh, is it South African? Oh, okay, good.
Yep.
So as I see it, let me just see there. That's why the name is Sibanye. Oh, okay, good. So what I'm looking at, you see, you got your interest at that round number low, $4. Always looking at round number lows. And if it bounces off the round number, either up or down, that's fantastic. That's what you want to see because it says if it takes out 4, it makes it vulnerable again to the downside. So you just know exactly where your stop is. Meantime, it's at $4.53. This is what I'd be looking at. You see the way the weekly chart has just had absolutely lower lows, lower highs. You see the way the pink 9-period moving average from the moment it crossed negative back in, that was February, the week of the 17th of February at $9.96 was the high. And here it is cut in half, goes down to 4, and yet that pink 9-period moving average is still terrible. But the on-balance volume in the weekly chart has gone to a level that I would say it's ready to try to turn around. So you have to look at the daily chart, and there you got your little V-shaped pattern. So that's one positive. The stochastic's at 46% and declining, but it is higher than it has been. So you've got a rising stochastic and a rising MACD with falling prices. That's a divergence that I look at, but it also says, wow, if this fails, look at all the room to the downside, because that MACD still has to go back to where it was previously if that's going to fail. So this is a really important moment. It's got a huge gap from yesterday. Now, if that's a news-related or earnings-related gap, you've got to take that seriously. 511 is the low on the 26th, and 438 is the high the following session. There's a huge amount to make up. So I would just, in the immediate term, I think of it only as a trade. And I know that you tend to do that until you get conviction that it's in the right area and doing the right thing. So now, as we're talking, it's gone to almost the high of the day. So the action that it's producing right now says, oops, yesterday's sell-off might have been just a little overdone, and now it's like a cork in water. Now it has to find its level, and the level might be by today, Friday, Monday. By Monday, I would say Monday probably is the latest. Maybe it'll go to Tuesday. But if this is not gone above the little doji candle high of 479 that was made on the 10th of March, in the next couple of days, it could start to stall here. It doesn't mean to say it has to take out 4. So what you want is speed. In other words, you've got to have a very quick move, and I'm going to draw a trend line in. It's like almost 3 price hits, and it's not quite the same in terms of time, but it does say that's been an incredible resistance area. There's the Chapman Wave inside track repellent zone, and that says at some point, without taking out 4, it doesn't matter if it messes around, it has to start closing above the trend line resistance. It's already got to get to 526. At 452, 526 feels like a long way, but it needs to get there. And as soon as it gets there, that weekly chart is going to start to change, because that on-balance volume will make a V-shaped turnaround. That's kind of what you want to see. So I have to commend you on your courage for getting it. I don't know how you even saw this SBSW, how it came to your attention, but whatever it is, I'm going to do one more trend line to say if I'm looking at it as more than just a brief bounce, then let me just draw in a parallel line right here. I'll do one, and you'll see that came in exactly. This channel to the downside came in exactly. If I treated this as an inside track propellant zone, you got it almost to the penny. Congratulations. As I say, I'm not sure how you saw it, but it so far worked for you. I just wouldn't make it a losing position, since you did your homework and it's done everything you wanted. So that just says this whole area right here, you don't want to see it break the $4.15 to $4 support level again. So I think you've timed it perfectly. There's nothing I can say. You've got it. You not only got the low, but you got the low from the high that was in the 20s back in February of 2022 at 20.64. So if this really works for you, and in 6 weeks' time we're looking at this up in the 580 to 610 area, that'll be fantastic. You got the exact bottom after a major over-year decline. So I just want to say congratulations, but I am looking at it saying lower lows, lower highs, lower lows, lower highs, lower lows. This has to be the time that it really changes that scenario. So those are the parameters I'm looking at. So once again, if it can go above that, it doesn't have to close, it just has to go once above the candle high of 479, and I'd give it time. So I'd say 3 days maximum. If it can get there, that's exactly what you want to see, because then it starts to fill in the gap. I don't know if that helps you, but that's what I'm looking at.
Oh, of course it does, Baz. I appreciate it so much. I honestly never saw any particular news. I just saw that it was going down, which is kind of ironic, as I had already been in it The day before that, and I sold out because I didn't like the way it was acting with gold going up, and it wasn't really participating.
It wasn't.
So I sold out, made a little money, and then, of course, then I saw it yesterday take the big move down, and so I decided to take a shot at it, just with options. I got a really good price on them, so we'll see what happens.
I don't know if you're looking at my charts, but if you're looking at this monthly chart, it missed by 2 months the low that was made on the March the 20th at $4.35 before it screamed to the exact double top in April of 2021, and March of 2022, it came down to almost the exact penny and almost in the exact time. So this is kind of ready to do something. So wish you luck. I'm going to follow it as well. Thank you for calling, and happy Thanksgiving to everybody, and congratulations.
Take care.
I'll be back, folks. We're talking about Microsoft as we close out the show. Be back in a moment.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I've got a couple of things about SPSW in the dense Sibanye, Stillwater. But mostly someone has said that it's primarily some gold, but they are seemingly divesting from it. Yesterday was a big convertible bond offering. Okay, so we'll see. So I just wanted to show you here on the 10-minute chart, you've got your peak D, but look at Microsoft. Microsoft has had that peak E, big gap up. It's starting to pull back a little bit. I'm not sure why anyone's looking at this. Maybe if you have options, that's different as a short. Let me show you something. TradeWeb, I think I spoke about this yesterday. I got the email right at the last moment. Trade Web is Trade Markets, TW. It's almost the same thing. Look at Doji Candle D. This says it should pull back, but here the technicals are just a little bit weaker than Microsoft, but still very strong. So this is what I'm going to do since we're about to wrap up. I won't have time. I won't be here Friday. We've got it all the way through Monday. So a lot of markets still to go. So in Microsoft's case, I wouldn't be messing around with the best of the best. I can see a bit of a pullback, but any hint of buying, I mean, there's no bad news, there's no dark news cloud cover here. That's the reason why I don't really want to be looking at the short side just yet. So Microsoft, I can't say anything about it. We're along from 338 today, almost at 339, 380. I mean, all I can say is we've taken a little bit off. All right, so I'm saying Microsoft, don't ask me because I might be biased, but I just see it maybe a little bit of a pullback to the 366 level. That's the 14-period moving average. That's number one. Number two, there's buying coming in. Every one of these pullbacks is seeing buying. That's not kind of the way you see sell-offs. That's number one. Number two is within the context of markets, I want to see, look, if the SMHs are only at peak C and pulling back a little bit with maybe a peak C, I want evidence. And any pullback at this time, there are so many people that have missed the move to the upside that I think they're going to be buyers. So I'm just saying, don't overthink the short side. But getting in long now is a little tricky. You do have to wait for some kind of a pullback. Have a wonderful weekend. Have a wonderful Thanksgiving. And we will see you all on Monday. And stay tuned for